The Price Group is a value-oriented, mostly cash, fashion and home goods retailer with a market cap of 61.4 billion rand.
It trades on a PE ratio of 22.5 and a dividend yield of 2.8%.
Do we own this one in the portfolio? I'm sorry to have to ask you that. It doesn't sound as though I'm very clued up.
We do at the moment. We have before. We've been in and out. You know, they're obviously a fantastic business. I think I was reading their last results and they've got a average return per annum of something like 24% over the last 30 years. It's an absolutely incredible story. Some rumors coming out at the beginning of the year that, you know, they're sort of losing quite a lot of market share to the likes of Cotton On and Zara and all the international brands coming in. But then after that, I think we'll have a look at the share price. We see a solid recovery.
Let's get Bjorn's commentary. Should we be holding it in the HotStocks portfolio?
Well, I think in speaking to what Byron mentioned about early on in the year, they were punished for reporting disappointing sales numbers. So it wasn't actually the results that they'd released, but disappointing sales numbers for the quarter end of December. And they were punished very hard. I think it is a stock that is priced for perfection given its track record and the fact that it has delivered 40 to 50% ROEs. It is priced for that sort of perfection. So
it couldn't afford to disappoint the market.
It can't afford to disappoint. And because of that, I think, in my view, I think that the market is pricing in a shopping down effect in hoping that you know, the more resilient LSMs that you based your portfolio on start to shop down and start buying from the likes of Mr. Price. There is obviously also the competitive threat, like the likes of Cotton On, etc., that are coming into the market. And one can't discount the rand. The rand has obviously been very weak for the past 6 months. They are net importers of their goods, and the competitors that are coming into the country have got much greater purchasing power when it comes to bringing those types of products into the country. So they are more competitive in that sense.
So let's get the share price graph up and look at how the market has responded. And there is the whack that it received when it disappointed the market.
And the recovery is along with all the other local retailers. We've seen a sort of retail recovery in general. You know, these guys pioneered fast retailing in South Africa, and I think fast retailing is less LSM dependent. You know, if you are extremely wealthy, you know, you can still pop into Mr. Price and buy 3 or 4 t-shirts. It lasts the season and then, you know, it falls apart. And that's the way it's supposed to work. They've been extremely innovative with Mr. Price Home and Mr. Price Sports, you know, that Mr. Price Sports model targeting the cheaper sports apparel, which is normally extremely expensive. So that's been a great model. So I think, you know, the management team have been extremely right on a lot of things they've done, and now apparently they're nailing the online.
Nailing the online, I think that's another point to mention. There is obviously a lot of legacy issues that come with having the retail space that they do have and unwinding that space. If they do start ramping up the online, they're essentially cannibalizing their own business, and rather they cannibalize their own business than somebody else does. Over and above that, I think that again, they do not have an offshore presence. This is very much SA Inc. And when you look at the other fashion retailers, they have been diversifying offshore. And when the rand does start to strengthen, as we have seen, that does benefit them. But if it starts to weaken, we obviously don't have that sort of diversification.
I've seen some reports out there, some well-known currency strategists looking at 17 on dollar rand, and they're basing that on a potential populist government under the Zuma administration.
I thought we said we were going to talk about such
yes, sorry, I couldn't help it. But 17 on dollar rand towards year end would have a serious impact on Mr. Price. Again, look, we don't know where this currency is going to go, but it is exposed.
Correct.
Hot or not?
I think what's also important to note, and what Bjorn mentioned as well about heavy credit sales amongst South African consumers. Mr. Price are 80% cash, and I think that certainly affords it a premium. And I think on that basis, I'm still going to be hot on Mr.
That
Price.
80% cash factor is significant underpin and makes it defensive, because you aren't going to see that bad debt cycle coming to fruition that you referred to earlier. So you're going hot?
Hot or not?
Hot?
I like the company. I like the operation. I like management. I just think the valuation is too pricey for me. So I'm going with not hot.
So a not hot from Bjorn.